Naushad Virji is a money manager and financial planner in Florida who counts individual investors and some nonprofit groups as clients. He manages $23 million in assets, three-quarters of them in Islamic finance compliant funds and products. He says most clients investing with him tend to be Muslims who want to grow their money according to Islamic precepts. But he also says a growing number of clients aren't Muslims but are attracted to the way some of these products are structured and the potential returns. He joins us now from Orlando. One of the big criticisms, Naushad, of Islamic banking is that it does profit from interest, but it masks it under the heading of fees. What's the difference here?
Well, the fact of the matter is that most Sharia-compliant investments are actually focused on being socially responsible investments and staying away from interest-based finance. And when you were talking earlier about PIMCO and a lot of the interest-based bonds, the focus in Sharia-compliant investing is to stay away from these highly leveraged vehicles. And it gives us a way to stay away from these highly leveraged instruments that can help when things are going up. But then we saw what happened in 2008 when the markets took a tumble. Their drop was pretty substantial. Now, Sharia-compliant investing stayed out of a lot of that because we simply did not participate on the downside in the financial services sector.
Generally speaking, though, socially conscious investing doesn't beat, plain old throw your money at major indices.
Well, I don't know if that's necessarily true, because if you look at, let's say, the last 10 years, on average, you'll find that Sharia-compliant investing does about as well as the S&P, if not maybe a little bit higher. Now, it's true that there isn't a direct correlation. For example, when the markets crashed, Sharia-compliant investing did quite a bit better because, like I said earlier, we didn't have a lot of the financial services sector exposure. But then after that, you see a lot of financial services companies coming up now. For example, Wells Fargo and Bank of America have done quite well since the last few years. So in these last few years, the conventional markets will do a little bit better.
Is there a real motivation then? If you're right, they can do better, they can do worse. If you're not Muslim and one couldn't care less about the Islamic finance principles, is there some compelling reason to be involved in Islamic compliant funds and investments?
Absolutely. In fact, here's one really interesting statistic. 75% of Sharia compliant investments today in the United States are actually owned by non-Muslims. Now, why are they invested in Sharia-compliant investing? The reason is that they've seen what happens to the markets when we have these highly inflated securities and mortgage-backed securities. And Sharia-compliant investing gives us an alternative that's not just socially responsible, but also avoids debt. And I think debt is the heart of the issue here. Because we don't, we've seen what happens when we have too much debt, whether it's an individual or a company or a mortgage-backed security. Excessive debt is dangerous.
So would an Islamic Sharia-compliant bank not issue a mortgage?
A Sharia-compliant bank does issue mortgages, but they're not the conventional mortgages. They are actually a co-ownership program. So, for example, when you go to a traditional mortgage company and you take out a mortgage, you're borrowing money to buy a house or a car or whatever it is. When you go to a Sharia-compliant bank, you're not actually borrowing money. You're getting a co-ownership program. You're basically getting a partner. So if you and I, Ali, go and decide to buy a house together, and you can put down 20% and I can put down 80%, but you're going to live there, then I'm essentially going to rent you the portion of the house that I own. That's how Sharia-compliant mortgages work.
Is that a real difference, or is that just sort of figuring out a different way to say it? Because really, when I have a mortgage, I guess the bank's kind of the co-owner with me, right? We've learned that when I don't pay my bills, somehow the bank ends up owning the house.
Well, this is where it can get interesting because, first of all, you're not paying interest on interest with Sharia-compliant mortgages. In addition to that, there isn't a recourse. It's a non-recourse mortgage, and that's a pretty big difference. Now, when you take all of these mortgages together, and you mentioned earlier about Sukuk funds in the previous piece, this is another exciting area to invest in because now you're talking about a mortgage-backed security that's not really focused or based on interest. It's based on equity more so. And when you put all these together into a Sukuk product, this is why Goldman Sachs is so interested in this right now, and this is why there's explosive growth in this industry in the United States.
Interesting topic. I'm glad you joined us for it. Naushad Virji is the CEO of Virji Investments, joining us from Orlando. All right, coming up next, Mars for a bargain. I'm going to explore how India managed to reach the red planet's orbit at a fraction of the cost most countries pay, including the United States.